All right, hey, good afternoon. Friday afternoon, here we are. Let's look at how the week ended. Not how we wanted to end the week, right? We end with the lowest close in soybeans from back here in June. I think this is June 29th. That's your lowest close. Since that point in time, we do have continuing divergence. The question is what changes, right, from yesterday to even 8 o'clock or 7:30 to 8:30? Like what is it? And it doesn't matter. It's just a symptom of I think the way the world's working. Equities start screaming higher, and grains get sold, ags get sold. So I think it's tied to money flow. I don't think it's tied to supply and demand at all, but I do think it's tied to money flow. So what we are hearing is that beans are running on par with last year, which is about 49 bushel to the acre, which is not 52, not 51. It's tighter than what the trade has been anticipating. So eventually, I think that runs its course. But for now, you've got no choice but to just make sure you're hedged and you're waiting for an opportunity to move again. I think technically, what happened here is we were just unable to break. On the close yesterday, we talked about this. We couldn't hold Wednesday's high, and we couldn't break these other levels. So an inability to push up above that and attract new buying just created some selling in and of itself. I think that's really all that's been going on. And now here's your weekly chart. You're straight down now for 1, 2, 3, 4, 5, 6 straight weeks on your weekly chart. So obviously this 1250 level here, that's just an obvious level of chart support and psychological area that needs to hold, or else beans could roll over and get themselves into trouble. So we're right at the point where we really don't want this thing to get any deeper. Right now, this still counts well, but a move below here is not going to be helpful. So we want to see strength in beans, one way or the other. Corn, really kind of the same thing. Now, there's some things I really like about this chart, and there's some things we don't like about this chart. Let's start with the things that we don't like, and then we'll back into the things we do like, because we're looking for downside risk, right? If beans collapse, I don't think there's any way that corn doesn't go with it. So we want to make sure that we're prudent and aware of that. So what I don't like is I don't like the red 2. I don't like that we're coming right up into the bottom side of our daily cloud. I don't like that stochastics are almost to the oversold territory and rolling over. And I also don't love that we're not picking up strength on the MACD. So those are things that we don't like. I also don't like that we're unable to challenge 506. Today we got the 499 and met with selling. So that's less than helpful. What we do like about it is that we're above our hedge line. We've got the bullish cross here, and you have to understand too that coming out of a big consolidation area, it doesn't take much for your oscillators to get overbought. So that's less of a significant signal than it would be if we were already in a significant uptrend. So not overly concerned about that portion of it. What we really like about corn, and we drop down to the 240-minute chart, is that we're above our cloud here, and this looks really good for higher. Probably a little bit deeper than we'd like to see this pullback here, but overall it doesn't look bad. Then here's your 1-hour chart. It looks pretty good as well. We just want to see this 90 level hold. Obviously this is an area of support that held for several days. This is going all the way back, back in ancient history here on September 29th. That this 490 level held as resistance. So now what was once resistance needs to become support. So we need to see it bounce off of here and hold above the 4-hour cloud and the 1-hour cloud. So here's your 4-hour. Here's all that shelf of support. That's where we want to see it hold and move back higher. So somewhat of a short-term line in the sand. Now back to their daily chart, and let's also take a look at the weekly. Keep in mind to where we are relative to all of our cloud levels. Here we go. Weekly, it looks really pretty good, right? So here we have a a bottom, we have a sell-off with a long upper shadow, and now we took that out and we closed higher on the week and reclaimed some significant resistance. So what's the best read? Well, like I said, there's a lot that we like. There's a lot that we don't like on corn. And I think the market is struggling to trying to digest that, because there's a lot that every trader likes, and I think a lot that every trader doesn't like, both bulls and bears. So people are undecided, and I think that's a symptom of a market that is under strong outside influences and uncertain of what its own supply and demand situation looks like moving forward. So we just need more time, more clarity, and ultimately we'd like to see some highs get taken out here, and we want to see these hold. So that's as simple as we can make it. But oscillators here, they look good. You've got the bullish cross up on the weekly. You've got MACD ticking positive. You've got a lot of good things happening down here in corn. It's just that shorter term stuff is a little timid getting going, that we more timid than what we'd like to see. All right, now let's talk about wheat. Wheat just absolutely all over the place all day, every day. Wheat got going yesterday on the news that I think it was the Turkish ship that hit a mine, but the ship was outside the corridor, so it's not an active war, and then the ship didn't sink, so it hit a mine, but it didn't sink it, so it's not really that big of a deal. And so we bought it with premium, and then today we took it back off. And that's just kind of the way these markets have been, right? Up, down, all around. And it's hard to string 2 or 3 days together. Remember, this whole move to the downside has been brought about not by supply and demand, but it's been brought about by government fiscal policy and Ukrainian support. That's what's doing it, right? We are paving the way for the Ukrainian farmer to move his grain at discounted prices, and then we're subsidizing them with cash, and we're doing that at your expense and at the expense of our markets. So and what's our government going to do in this situation? They're going to increase subsidies to our own people and raise our taxes. That's what we do. I don't agree with it or like it, but that's what's happening. And generally, when governments behave like that, look at oil and look at the strategic reserves. Look at how we went from negative to wildly positive in oil. You tend to create recoil effects because you stretch the rubber band too far, and then when the policy changes, it's like letting it go, and all of a sudden it recoils back the other direction. I think that's what's probably going to happen in wheat at some point, because what we've done makes literally no sense whatsoever, and the market's already struggling with interest rates and those kinds of things moving forward anyway. So we're going to be patient. We're going to continue to be patient with wheat. We don't want to see these lows down here give way, because then who knows how far it'll fall again. But everything here looks fine. I know it doesn't feel fine because it sucks that we can't get a rally, but technically everything here is holding firm and looking pretty decent. Weekly chart of December wheat. Nice little reversal here, or a piercing pattern. If we can get up and out of here next week, you're going to have a 3 inside up on the weekly chart. But a lot's got to happen in order to persuade the market to do that. You got to have some sort of a catalyst, and we just didn't get it today. Okay, and outside markets, Dow's up. Oil is back up just a little bit, forging a little bit of a bottom. The dollar's off. So there's just lots of different things influencing these markets, and I don't think our grain markets are driving the ship. I think they're just getting whiplash because all the other they just get caught in the middle of it and get beaten around because traders are positioning. So we'll just stay the course and see what happens on Monday. Remember, there is always risk trading futures and options, and you should only do so in light of your own financial condition. And with that, we'll call it a week. I hope you guys have a great weekend. We'll talk to you tonight, or talk to you Monday. See ya.